Hello and welcome back to the channel. We will discuss about the penalties on non-compliance of transfer pricing regulations. Transfer pricing refers to a price that is paid for goods and services transferred from one unit of an organization to another, that is between related parties. In India, the transfer pricing law is codified under the Income Tax Act 1961. Under law, non-compliance with transfer pricing regulations can result in heavy penalties. The penalties under transfer pricing can be divided into the following heads. 1. Underreporting and misreporting of income. Underreporting of income results in penalty of 50% of the amount of tax payable on the underreported income. Misreporting of income means failure to report an international transaction or transaction deemed to be an international transaction or specified domestic transaction to which the provisions of Chapter 10 applies. Underreported income happens due to the misreporting thereof, which results in a penalty equivalent to 200% of the amount of the tax payable on the underreported income. Second, failure to maintain documents and information with regards to international transaction or specified domestic transaction. In cases where a person in respect of an international transaction or specified domestic transaction fails to keep and maintain specified documents and information required under subsection 1, 2 of section 92D, fails to report such transaction which should have been reported, or maintains or furnishes information or document that is incorrect. In such a case, a penalty can be imposed on such person which is equivalent to 2% of the value of international transaction entered into by such person. Further, a penalty of 5 lakh rupees in case of failure to furnish the master file within the prescribed date can also be imposed. Third, failure to furnish a report under section 92E. If any person fails to furnish a report from an accountant under section 92E, then the assessing officer shall have the power to direct such person to pay a penalty amount of about rupees 1 lakh. Fourth, failure to furnish information documents under section 92D. If a person who has entered into an international transaction or specified domestic transaction and doesn't furnish any information or documents as required by subsection 3 of section 92D, then the transfer pricing officer can impose a penalty of a sum equivalent to 2% of transaction for each such failure. Next, failure to furnish documents or information under section 286. Under section 286, a parent entity or the alternative reporting entity resident in India is required to furnish a CBCR report on or before the due date. Failure to furnish a CBCR report attracts a penalty which varies as per the timeline of the violation, ranging from 5,000 rupees to 15,000 rupees a day. Next, incorrect information in reports and certificates. If an accountant or merchant banker or a registered valuer provides information that is incorrect in a report or certificate under any provisions of the Act or rules made thereunder, then the assessing officer or the commissioner shall have the power to impose a sum of 10,000 rupees as penalty for each such incorrect report or certificate. Strict compliance with transfer pricing regulations is a must, whether it is in respect of furnishing documents or information or it relates to reporting of income. It is therefore necessary for a business to understand the concept of transfer pricing and transfer pricing penalties in order to meet the compliance requirements and to eliminate the risk of non-compliance. Thank you. For more such content, please like, share and subscribe to this channel.